Hey guys, Stockaholics, thanks for being here today. Some of the things I'm going to be saying today aren't the most bullish ever, but I would like to remind you guys that I am still a tanker bull. However, some of the things, some of the things directly taken from the CEOs of these companies, the horse's mouth, if you will, are making me a little bit more bearish. So I would like to remind you guys that if I say something that you don't like that is bearish, remember to click that like button. So here we go. So today will be part 2 of the Stockaholics Q3 2020 Tankers Insights video. I made a part 1 that was specifically focusing on product tankers. If you're interested, and quick note, I am more bullish on product than I am crude. All right. If you find this content useful, remember, click a like, and I'd also greatly appreciate subscribe if you would like to see more content like this. So I listened to and researched these 3 companies to try and get some insights into how these companies and these CEOs feel about the environment in Q3. I listened to Euronav's conference call. I listened to Double Hull Tankers, as well as researching their reports, reading through those, and also Nordic American Tankers. I didn't listen to NAT's conference call. I couldn't even find it, to be honest, but I read their their report. So a quick mention: none of these companies were attacked by pirates this quarter, so nobody gets the pirate coin this time. So it looks like the product tankers are going to be winning as far as pirate attack goes. However, these companies, especially Euronav and DHT, were significantly profitable in what could be construed as one of the worst environments for tankers. Euronav made 22 cents per share and DHT made 31, and NAT made -7, but I wouldn't, based on their strategy, I wouldn't even say that this is that bad. The reason these two were more successful than NAT, I think NAT tends to rely more on the spot market, and these two tend to rely more on charters. So these two companies, DHT and Euronav, were able to fix some charters during Q2, especially when those rates were going to the moon. Yeah. One thing I guess I'll mention, some of these guys' strategy for their capital allocations. Euronav is doing some buybacks. They are also maintaining a very high dividend, and they have some good. They're returning some of that money to investors in that regard. Yeah, DHT, same thing. They recently diluted shareholders. However, they mentioned in their conference call that they don't plan to do these convertible notes anymore, which I like, and they're also maintaining their high dividend. NAT, and these two also, by the way, all 3 of these companies have been paying down debt, and NAT has maintained their dividend as well. Today I'm going to be talking about some of the shared insights from these 3 companies, particularly their CEOs, and we'll be talking about the short-term outlook for crude tankers, the order book, scrapping, and the thing that I mentioned that was making me kind of bearish, which again, which didn't come from a bear. It came from the CEOs themselves, and I'll talk about this red flag towards the end of the video. All right. So the short-term outlook, and this is the quote from Hugo De Stoop, the CEO of Euronav: "The market is shit. Pardon my French." So Q3, it has not been like Q1, Q2, or Q4 of last year. The crude tanker market has not been doing good. This is particularly for a couple of reasons. So during early Q3, the rates were reasonable. They were all right. And this was it had a lot to do with congestion in the ports. So if you remember in Q2, there was that contango situation where oil went to very low. Well, what China did as a result, they ordered a shit ton of this stuff to kind of store and kind of make as to refine as products, and then which I guess they plan to sell at a later date. When they did that, they not only was there tons of oil being stored on the vessels themselves, but there was a big congestion to drop this shit off at the Chinese ports. However, that isn't the case anymore. So not only has this congestion been cleared up, which freed these vessels to return to the market, but all of that the oil storage has also dissipated. So now we're looking towards maybe say the last half of Q3. It's been atrocious as far as rates go for all crude vessels. Also, this is kind of a bleak outlook when we're thinking about the stockpiles of oil. So all of this oil had to go somewhere, and you can see this is for the United States only, but we have been since July and still are way above the average in terms of land storage of these stocks of crude oil. And what this means is that this stuff is very likely going to need to be drawn down before you see significant tanker movement again, where you see people ordering and you see a robust tanker market again. We're going to need to see this at least return somewhere in this gray range, and preferably towards the low end of this, right? So we got a ways to go before that is the case. Now, I will say that that's not the case so much for product. And again, if you are interested in that, please refer to that product tanker video. Yeah, but these guys have taken advantage of this, and these guys have done a lot of their dry docking, their maintenance, some surveys to kind of take advantage of the poor rates, right? All right. Now the order book still remains low for crude, but I'm starting to see things I don't like. It is still reasonably low at 8% of the fleet. The IMO 2030, which is kind of regulations on as far as the emissions for shipping vehicles, it's still uncertain, and this is causing these ship owners to be they're uncertain if they want to order a new tanker, because they don't know if the tanker that they order will meet the regulations in the future. So this is causing some headwinds, which is good, which we like to see. We don't like to see lots of tankers on the market. And it makes it difficult for these guys to buy new ships. But you'll see in a second. Also, economic uncertainty is kind of doing the same thing. So there has been a slight shift. The vaccine has been introduced. I mean, it's not been introduced yet, but there's a vaccine. There's two, right? And this is kind of changing the sentiment, and the uncertainty is changing, but for the time being, the economic environment is still quite uncertain. We know that in Europe, and we know that some parts of the United States, there's more lockdowns, and this means that a reduced demand for oil. Worldwide, we'd also say that the economic damage of the COVID has likely reduced oil demand, and will likely to do so for some time anyway. When that recovery takes place, we don't know. So there's still economic uncertainty, right? But this is some of the stuff that I don't like to see some of these tankers doing, these tanker companies, right? So Nordic American Tankers, one of these companies, they have 2 new builds on the way. So they're kind of saying these things. And I don't hold it against these guys. These guys have an old fleet, but they're building more ships, right? Euronav, same thing. And to be fair with these guys, they said they ordered these before COVID, but we're seeing more ships. Now we're also seeing a economic project coming out of China that is ordering a significant amount. This is coming from the government particularly, where they're ordering, it's not set in stone yet what the amount will be, but they're ordering a significant significant amount. Some low estimates they say 10. Over here I say 20. I've also seen some higher estimates where they're saying there may be as much as 30 VLCCs, very large crude carrier. These are big oil. They could significantly impact the market. Yeah, and they're going to be ordering this as part of a country program to secure their energy transportation. So part of China, their mission is to secure their supply of oil to their company. They want to be sure that they own, or that their at least companies within their country own the VLCCs to maintain adequate levels of oil coming to it in and out of their country, as far as to maintain security of the People's Republic. Yeah, so it's kind of coming down to this do as I say, not as I do mentality that I'm starting to see, where they're saying one thing, but at the same time they're doing what shippers do. They order ships. Yeah, so the question kind of becomes, as we move past the COVID environment, where some of this uncertainty might be lifted, and some of this, let's say in the coming years where we see some of this uncertainty in IMO 2030 lifted, does that lift the floodgates? Will that make it so that we see mass new building? And I certainly hope not. So some things that I don't like to see, but there is scrapping, and we must remember that the fleet is quite old, so there are some positives, right? Now, so far in 2020, we haven't seen almost any scrapping. I think we saw one VLCC recently scrapped, and that's because of something where the regulators kind of they pushed back some of the regulations. They pushed back some of the surveys and those kinds of things for this year, particularly because of the COVID environment, to I guess mitigate the spread of the virus, right? So when this ends, I would expect to see a lot of scrapping. And so this is from Euronav, and they're making the case that, well, the rate environment is trash, right? So when the rate environment is low, in the past, when we've seen these rates, and they're likely to be lower before, continue to be before the cash break even for tankers, VLCCs, and I would argue it's going to be for all crude vessels. When this gets to a certain point, we see a lot of scrapping. And I think as we see those surveys, those special extensions, I guess, because of COVID coming to be, you're going to see a lot of scrapping. And I think in 2021, we will see a lot of scrapping. So that is something that's good to look to into the future. This is, I'm not sure where I found this. I kind of feel bad, but it's so valuable. I still wanted to use it anyway. So if you know where they got this, you can let me know in the comments. This is stolen intellectual property, but this kind of gets you an idea of kind of why we're going to see scrapping, right? So you look at these 15-year-old and 20-year-old VLCCs, and I've mentioned this before in a couple of videos. The cost to maintain these vessels goes up a lot. And when you get over 20-year-old VLCCs, and any crude, this doesn't have anything, you can see it's not going to be the exact numbers for Suezmaxes and other types of vessels, but you're going to see a similar trend. You're going to see that these special surveys, particularly, they become more expensive the older the vessel gets, and not only that, they have to do more often. So this encourages tanker owners to scrap their vessels, because these regulations, these surveys become very, very expensive, and it becomes very difficult for these companies to operate these old tankers. Yeah. So there hasn't been scrapping yet, but these special surveys are going to come due. So again, we're very likely to see a lot of scrapping in 2021. And like we said, we all, to maintain, for me to maintain bullishness on these tankers, I want to see continuous scrapping at a higher rate than new building. Now, a lot of these CEOs are kind of, they're infected by the same peak oil kind of bearish mindset that a lot of people are. I don't share that view. I think we're going to continue to see oil growth for the future, which means we are going to need more tankers if that comes to be. But one of the ways that either way we could be happy is if we continue to see scrapping higher than new building. Okay, this is where I noticed something that I really don't like, and I've never seen anybody talk about this, so I would probably think that you heard it here first today too. I think that there is a potential fundamental problem in tankers looming, and it's not particularly we'll call this the ESG infestation, and it's not particularly because of the way that I see tanker companies thinking about ESG, because there is certainly an infestation in their mindset. When you hear them talk, when you hear the CEO of Euronav, which is a crude oil tanker company, and you hear the CEO of DHT talking about peak oil, which is a crude oil company, and you hear these guys talking about environmentalism and all of this stuff that's all over the place, right? When you hear these guys, which are in the business of transporting crude oil, talking about these things, there's certainly an infestation in their mindset. But I don't think that's the problem. I'm noticing something from something else. And this was a genius kind of observation that I heard when I was listening to the Euronav conference call. And I'm going to show you what that is on the next slide. The ESG madness. So it's not from these particular tanker companies that I think this is going to be a problem for. I think it's going to come from financing. So what you're seeing here, let me just read this first. ESG loans, and we're seeing this a lot in Europe, are being offered and being touted. And these tanker companies, they're proud of this stuff. They're like, hey, look, we're contributing to bettering the environment or whatever, right? I don't know if they know. I think this is going to be detrimental to them. So they see this as a positive public relation benefit, and they're helping out the environment. And I'll let you know why I think this is going to be a massive negative on the entire tanker industry. So what we have over here, this is financing. So when tanker companies, they want to order new ships, a lot of times they have to get a loan, or if they want to buy a used vessel or whatever, they have to secure some kind of financing in order to purchase that vessel. Now it might come from shareholders, but a lot of times it comes from banks. And so what we're seeing in Europe is this thing called green financing, essentially. So and the Euronav CEO, he was very proud of this, but me, I'm like, whoa, wait a minute. So what this means is that banks, they're essentially going to give loans to vessels that meet certain emission criteria, meaning that if you fall below a certain emissions threshold, let's say your ship is cleaner than average, and you're doing a great job, and you got some special equipment on your tanker that's reducing the emissions, well, that means that they're going to decrease, I guess, the interest rate for that ship. So when you think about this is an incentive, right? And this is going to be I think this could potentially be to detriment to the entire industry, because it's not going to encourage company owners to buy older ships or to recycle them or to kind of shift them from company to company. What it's going to do, I believe, is this is going to encourage new building. If they have a cleaner ship, a lot of times that means it's going to come from a newer ship, and the newest ships are new builds. So when they're getting this financing, I think this is very likely going to be a restraint, or it's going to be something that's restricting tanker companies from buying other older vessels, and it's going to be a benefit to buying new ships. And again, this is what we do not want to see. We do not want to see an excess supply of ships, which is kind of funny because if this does come, what I'm seeing does come to fruition, it's going to probably cause more emissions. And so I think that this could potentially be something called the Cobra effect. Now, let me show you what that is if you don't know what that is.
The Cobra effect refers to a story of a British overlord in colonial India who thought there were too many cobras in Delhi. He offered a cash bounty for every cobra skin. The incentive worked a little too well. It gave rise to an industry of cobra farming. Indians started raising cobras to kill and collect the bounty. So the bounty was rescinded, and the cobra farmers did the only logical thing and set the cobras free. The same thing happened with feral pigs in Georgia and rats in South Africa, and with carbon credits. The UN set up an incentive plan to compensate manufacturers for curtailing pollutants released in the atmosphere. For every ton of carbon dioxide eliminated instead of released, the company would receive 1 carbon credit that they could sell on the open market. For every ton of the super greenhouse gas HFC 23 destroyed, a company would receive 11,700 credits. So factories churned out extra gas that they could then destroy to collect credits. The average factory earned more than $20 million per year selling carbon credits for HFC 23. Why do some incentives backfire so badly? No individual or government will ever be as smart as all the people out there scheming to beat an incentive plan. It's easy to predict how an incentive would change your behavior. But the people whose behavior you're trying to change often don't think like you. People don't always behave the way they do today. When a rule changes, behavior does too, although not necessarily in the expected direction. So the next time you want to offer an incentive, beware the Cobra effect.
So, I think that these kind of effectively carbon credits effectively may lead to increased tanker builds. These governments in Europe think that they're doing the right thing, but I'm seeing some things that are potentially alarming, especially as an investor. Now, it is kind of early. Maybe I could be wrong. You guys let me know in the chat what you think about this. But it is something I'm going to be watching carefully. I want to see that we really need to be watching these new builds. We got to remember that these tanker companies, they're in the business of shipping. And whenever they can get a new ship, they might say one thing, but, well, they might do another. And these are shipping companies, they want ships. So anyway, if you found this information useful, I'd greatly appreciate a like. And again, I'd be interested in your guys' comments on this one. Until next time.